Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh.
Alaikum salam wa barakatuh.
Yeah.
Alaikum salam wa barakatuh.
Assalamu alaikum wa rahmatullahi wa barakatuh.
Alaikum salam wa barakatuh.
Wa alaikum assalam wa rahmatullahi.
Thank you very much for joining. I'll start by introducing myself. My name is Abdul Hakim Akimbode. I'm currently the Deputy Registrar, Institute of Islamic Finance Professionals. I want to humbly, on behalf of the Institute and also on behalf of our partner, the Chartered Institute of Stockbrokers, I want to welcome everybody present. And I also want to, at the moment, also welcome our speakers, Dr. Adam Abakar, and also Mrs. Onidamola Dada. I want to also welcome you for joining and also taking time to join us today for this joint training. I want quickly, and to do that, I want to immediately move to the first thing on our agenda, which is to have the national anthem to welcome every one of us to this event. So I'm going to be sharing to allow us have our national anthem. Thank you very much for taking that. And again, we also want to, again, for those just joining us, I want to again welcome every one of us to this training, which is jointly organized by the Institute of Islamic Finance Professionals, as well as the Chartered Institute of Stockbrokers. Today, our conversation, which is going to be tailored around looking at two very important developments in the financial industry. And by financial industry, I mean the Islamic financial, or you call it the non-interest industry. And that is going to be looking at the recent compendium of resolution of the Financial Regulation Advisory Council of Experts, that is phrased the Series 1 to the non-interest financial institutions, and also looking at the activities of Islamic banks. And we are trying to evaluate, we are trying to look at how Islamic banks actually in driving and also enhancing the MSME's growth and development. Before I move on again, I would want to recognize the presence of people, eminent people who are present at the moment. I'm going to be taking time to recognize as people come on board. And first of all, I want to recognize I can see here presently, I can see the acting president, who also doubles the chairman, governing council of the Institute of Islamic Finance Professionals, in person of Professor Tajuddin Yusuf. I want to use this medium to recognize and also invite everyone present to help congratulate him in his new conferment as a professor, not just a professor, but the first professor in the field of insurance and risk management in University of Lagos. We appreciate you, sir. Moving on very fast, I want to also recognize other people that are very present at the moment. I want to generally acknowledge everybody here, and also to say that you are warmly welcome to this event. The next thing on the agenda, which is going to be to have an opening prayer, and I'm going to quickly run down to call on Professor Keita. I'm sure Professor Keita is here. Professor Keita, I'm going to mute you now to briefly give us an opening prayer.
Thank you. Good morning. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, everybody. I'm going to pray quickly in Arabic, and I wish you say Amin. ربنا آتنا في الدنيا حسنة وفي الآخرة حسنة وقنا عذاب النار. ربنا لا تزغ قلوبنا بعد إذ هديتنا وهب لنا من لدنك رحمة إنك أنت الوهاب. ربنا هب لنا من أزواجنا وذرياتنا قرة أعين واجعلنا للمتقين اجتماعا مرحوما واجعل تفرقنا له تفرقا معصوما ولا تجبن يا رب العالمين. سبحان ربك رب العزة عما يصفون وسلام على المرسلين والحمد لله رب العالمين. May Allah bless us.
Thank you very much, Prof, for that very quick opening prayer. And with that, I think we are very ready to move on to the next line of agenda, and that is to invite the registrar of the Institute of Islamic Finance Professionals to warmly welcome us and also give us the opening speech before we move on. I'll be calling on Mr. Mansour Adeyemi Musa.
Assalamu alaikum wa rahmatullahi wa barakatuh. I want to welcome everyone to this another edition of our continuous professional development. This event is coming as the first CPD event that is being organized by the Institute of Islamic Finance Professional. But the unique thing about this event is that we are now having a collaboration with our sister institute, that is the Chartered Institute of Stockbroker. So this is a collaborative event. You will recall that throughout 2021, we had about 6 CPD events, and all members agreed with me that it was such a very educative and engaging event throughout last year, and we crowned it up with the stakeholder engagement stroke induction ceremony that was held in December. So we are starting up again with CPD event this year, and this is the first edition. We are happy that we are not just organizing it alone as an institute. We are also collaborating with another institute. So this is a collaborative event, and we believe that our members will gain a lot from this program, and it's also going to count as part of the credit unit that will be awarded to all members that will attend this event. I pray that Allah subhanahu wa ta'ala will make this beneficial for us, and will count it as our own contribution to the development of Islam. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh. Thank you very much for that welcome address. And at that, I want to move to the first lecture. And if we look clearly on our agenda, we'll see that the next item is for us to have a profile of our first lecturer in person of Dr. Adam, which is going to be read to us by one of our senior member of the Institute, who is also an associate lead of the Institute, and that is in person of Ajia Wasilat Odeshino. I'm going to be calling on Ajia Wasilat Odeshino to quickly read to our hearing the profile of our first lecturer in person of Dr. Adam. Ajia Wasila, if you can hear me, can you move on to reading the profile of Dr. Adam?
Okay, assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam wa rahmatullahi wa barakatuh.
This is the brief profile of Dr. Adam M. Abubakar, Iifp, ACS, SCIS. Dr. Adam Mohammed Abubakar obtained BA in Islamic jurisdiction from International Islamic University in Niger Republic and a postgraduate diploma in education from University of Maiduguri. He also obtained MA in Islamic Studies and PhD in Islamic Studies from Bayero University, Kano in 2010 and 2014, respectively. He further obtained another PhD in Islamic Finance from Al Medina International University, Malaysia in 2016. He also obtained Islamic Finance qualification from prestigious Chartered Institute of Security and Investment, United Kingdom, and attended CIS Executive Convention course at Chartered Institute of Stockbrokers of Nigeria. Currently, Dr. Adam is a senior lecturer of Islamic Finance at Yobe University, Damaturu. He had many administrative responsibilities, such as acting head of department and director of Center for Research in Quranic Studies. He also served in many university-based communities at various capacities, not only at the department and faculty levels, but also at the management and senate levels. Dr. Adam authored 3 books, both in Arabic and English, edited 1, contributed 3 chapters, and published over 40 articles in both local and international referred journals, majorly in Islamic banking and finance. He also presented many papers at local and international conferences and facilitated many professional trainings and workshops organized by many professional organizations, such as English Business School, Chartered Institute of Stockbrokers, Institute of Islamic Finance Professionals, Nigerian Stock Exchange Academy, PenUp, etc. Besides being a Sharia advisor and consultant of many Islamic financial institutions, Dr. Adam is a fellow member of different professional organizations, among which are, he is a fellow member of Islamic Finance Professional, that's our Institute of Islamic Finance Professionals of Nigeria. He's also an associate member of Chartered Institute of Stockbrokers of Nigeria. He's an associate member of Chartered Institute of Securities and Investment in United Kingdom. And he's also a member of Islamic Economics Club, Kuwait. He's also a member of Association of Zakat and Wakaf Operators of Nigeria. He's also a member of Nigerian Association of Teachers in Arabic and Islamic Studies. Currently, Dr. Adam is the lead consultant on Islamic banking and finance with Annuity Ethical Consulting Limited. So we welcome Dr. Adam, and we hope to gain from his wealth of knowledge. Thank you very much.
Welcome to the bargain.
Okay, thank you very much, Mr. Wasilat, for the presentation of the profile of Dr. Abubakar. So, Dr. Abubakar, if you are on, you are muted. Can you please unmute yourself so that you can make your presentation?
Okay, thank you very much. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. وصلى اللهم وسلم على نبينا محمد وعلى آله وصحبه أجمعين. Please allow me to share my screen.
Okay, let's.
Firstly, I want to register my appreciation to my two dear institutes that I fully belong to as a fellow and an associate member of both the Chartered Institute Institute of Islamic Finance Professional, our own institute, and Chartered Institute of Stockbrokers of Nigeria, whom I am also an associate member. It is indeed a fruitful and going to be a resourceful partnership. We hope to see more partnership with other sister institutions within and outside the country. My presentation is going to be on the recent compendium released by the Central Bank of Nigeria, which is the apex bank in the country. The presentation titled An X-ray of the CBN Compendium of Fresh Resolutions for Non-Interest Financial Institutions, NIFIs, and Stakeholders, which was released earlier in January this year. Briefly, the presentation is going to center around the background, significance of Sharia governance in non-interest financial institutions, understanding the operational framework of FRES, an overview of the compendium of FRES resolutions, then understanding the resolutions recently released, then potentials of the resolutions contained there in the compendium, then finally conclusions. As you all know, Islamic banking and finance is an international, is a form of financial intermediation, alternatively that is based on the Islamic value system. Though it is based on religious laws, nevertheless, it is not a religious product or service. Rather, it is accessible by all. Therefore, investments are to be only in morally and legally approved courses. This stress needs for the supervisory and regulatory authorities to have a role in monitoring or enforcing Sharia compliance by Islamic banks in order to maintain public confidence in these institutions and avoid massive withdrawals of deposit by customers, which could lead to an adverse effect on the financial system. So we can see recently in January 26, 2022, this year, the central bank, in its effort to ensuring effective regulation and supervision of non-interest financial institutions, hereby issued the compendium of resolutions of FRES as a reference to the industry for ease of understanding of Sharia interpretations made by that important organ on any particular matter, by providing comprehensive understanding of the Sharia rulings made by the Financial Regulation Advisory Council of Experts on the product and services developed by non-interest financial institutions. So this work is part of what is known in the Islamic finance as Sharia governance, which is the most important and the most distinctive feature and unique portion of Islamic financial system, which is lacking in the conventional finance system. It is part of Iifp, system as a state institution that promotes the proper conducts and avoid, in order to avoid the type of misdeeds in the financial system. So the major functions, is my slide moving?
No, it's not moving and it's not reviewed.
Okay.
Can you put it in the presentation form so that we can see the, okay, that's
okay. Is this in now?
Yes, it's okay now.
So you can start moving.
Okay. So The major functions of Sharia supervisory boards is Sharia auditing, reviewing products, issuing fatwa, and purification of non-permissible income. And its main purpose is to maintain public confidence in these institutions to avoid massive withdrawals of deposits and prevent Sharia arbitrage in case of people claiming to be offering Islamic or non-interest financial services, what in the contrary, they are doing something else. So let's have a look at international outlook of Sharia governance. Usually there is what we call international standard setting organizations, with Iifp taking lead in this, which was established in 1990 and started operations in 1991. Accounting and auditing organization for Islamic financial institutions, which has equivalent function with the International Accounting Standard Board. There is also the Islamic Financial Services Board, IFSB, which is equivalent to Bank for International Settlement. It was established in 2003 and has its headquarters in Kuala Lumpur, Malaysia. Then there are other international institutions that are supportive. We have International Islamic Financial Market, IFM, which has equivalent role with the standardization and documentation of Islamic, which has the function of standardization and documentation of Islamic products related to process. Then we have Islamic International Rating Agency, IIRA, which has the mandate of rating the Islamic financial services industry. Then there is General Council for the Islamic Banks and Financial Institutions, which is equivalent to British Bankers Association in UK. Then there is International Islamic Liquidity Management Corporation, ILLM, which has the mandate of facilitation of cross-border Islamic liquidity management. Then there is Islamic Research and Training Institute, IRRT, which is a subsidiary of Islamic Development Bank. So these are aiding, this is the general outlook of Sharia governance. These are the institutions that set standards in order to streamline the Sharia governance of non-interest financial institutions, or rather Islamic finance. When you come down home in Nigeria, it is part of the corporate governance that is being operated in all financial institutions, which is usually guided by the Nigerian Code of Corporate Governance 2018, which was, to my knowledge, is the latest. Then beside this, after this corporate governance, then there is adoption of standards issued by these international setting organizations that were earlier mentioned. We have International Islamic Fiqh Academy, we have Iifp, we have IFSB, we have ISRA, we have SIBAFI. All these standard setting organizations, as we're coming to see in the compendium, they are even been referred to. Then there is what we call in Nigeria centralized Sharia supervisory boards, and this is the exact point where we are. We have at the central bank and the SEC level, we have Financial Regulatory Advisory Council of Experts, which is the phrase that is going to be our subject of discussion. Then in the TACAF Industry Council, which is at the supervisory level, at the level of NACOM. Then there is Sharia Advisory Board at the level of PENCOM, which is also responsible for Sharia governance at the regulatory level, which is the centralized system. Then at the institutional level, there is another Sharia governance system in Nigeria. If you take Islamic banks in Nigeria, usually they used to have S. This S is equivalent to Sharia Supervisory Board in other countries, but in Nigeria, for one reason or the other, it is named as Advisory Committee of Experts. So also in the insurance, it is also called Advisory Committee of Experts. Then in Islamic capital market, they are called Sharia advisors. And recently in the guidelines for the Sharia governance of the non-interest fund that was released by PENCOM, they established their centralized pension industry non-interest advisory committee. So these are the institutional, they are the level of the institutions. Then internally, there is what is called internal Sharia unit, which is checkmating day-to-day activities of the non-interest financial institutions. It's an internal independent mechanism for that. Now, let's have a look about the understanding the operational framework of the FRES. The Financial Regulatory Advisory Council of Expert FRES is an advisory body at the level of the central bank to provide assurance that the strategic direction and conduct of financial transactions of non-interest financial institutions are in compliance with the rules and principles of their operations. According to Section 9.1 of the CBN guidelines for the regulation and supervision of the institutions offering non-interest financial services in the country, the council, that is the FRES, shall advise the CBN on matters relating to the Islamic financial commercial jurisprudence for the effective regulation and supervision of non-interest financial institutions in Nigeria. So currently the council has 9 members, with Sheikh Sharif Saleh, our Sheikh Al-Husseini as the chairman, and our another Sheikh, my mentor, Dr. Bashir Aliyu Umar as the deputy chairman, as well as Dr. Yakubu A. Umar as special advisor to the CBN governor on the Islamic finance, and Mr. Chibuzo Ifobi, the director of financial policy and regulation department of the central bank, as the secretary of that committee. This is the structure. Other members include my teacher and my mentor, Professor Abdurazak Alaro from University of Ilorin Faculty of Law, and Professor Muhammad Akram Ladin from Malaysia, who is in INSEF, and Professor Usman Muhammad Shuaib, who is also from Faculty of Law, Bayero University, Kano, and Dr. Muhammad Burhan Arbuna and Sheikh Abdullahi Garba Ogbedi. All these are the 9 members of the current FRES in the country. Now let's have a very short look about the duties and responsibilities of the FRES. According to the CBN guidelines on the governance of Financial Regulation Advisory Council of Experts, FRES shall have the following duties and responsibilities. 1, give final juristic opinion, which is fatwa on Islamic banking and finance matters referred to it by the CBN, and also give the same which is referred to it by other regulatory agencies such as NDIC, SEC, NICOM, PENCOM, and Debt Management Office of the Federation. Also to endorse and validate application documents for new products and services, advert materials, etc. from non-interest financial institutions to ensure that they comply with the provisions of Islamic commercial jurisprudence. They are also to provide written juristic opinion of Islamic jurisprudence in respect of new non-interest financial products, that is Islamic financial products and instruments developed by CBN or referred to it by the central bank or other regulatory bodies in the Nigerian financial system. 5 is to screen prospective ACE members for the confirmation of their appointment by the CBN. As we've just highlighted that the advisory committee of experts at the institutional level, they are also answerable to the FRES. So FRES has to screen them in order to affirm their appointment or recommend their appointment by the CBN at their respective financial institutions. And also to provide support for the Central Bank of Nigeria in respect of questions and queries that may be raised regarding the Sharia compliance of financial products, instruments, and institutions, and also to resolve differences of opinion arising between different advisory committee of experts of non-interest financial institutions and between members of the same advisory committee of experts or arising between the boards of directors and the A's of NIFIs. So all these the differences that may arise between all these institutions are to be resolved or referred to FRES with the view of resolving them in accordance with their mandate. Then to represent the bank in relevant multilateral institutions of which the central bank is a member in the committees and working groups that are related to the field of expertise of the FRES. This is also very important, as we all know that Nigeria has been a member of Islamic Development Bank since 2003. And with the introduction of non-interest financial services in the country, Nigeria become a chartered member of particularly the Central Bank and the Securities and Exchange Commission, become full members of the Iifp as well as the IFSB. So also ISRA and other international multilateral institutions that deal with the Islamic financial services. That's why even currently, the current Secretary General, who is the Chief Executive of IFSB, is a Nigerian by name, Professor Dr. Bello Dambata. All these are part of the achievements that are recorded in the sector. They shall be responsible and accountable for all juristic decisions, opinions, and views provided by FRES, then to carry out any other duties assigned to it by the management of the CBN from time to time. So now let's have an overview about the recently released compendium, which is in compliance with the Sharia requirements as a prerequisite for ensuring the legitimacy of Islamic financial products and services, which may render financial transaction entered between an Islamic financial institution and a customer to be valid if not observed. In its bid to ensure that the industry, players, and stakeholders have a comprehensive understanding on the ruling made by the FRES, the CBN issued its maiden compendium, which is the series 1, is going to be in series, as reference to understand the Sharia interpretations made by the FRES on matters presented before it. The document consists of 44 resolutions made by the FRES on matters raised during its meeting. One of the major features of this resolution is provision of the justification for any resolution made, either by referring to primary sources of Sharia, Quran, Sunnah, Ijma, and Qiyas, or reference to opinion of the Muslim jurists. Sometimes they refer to madhab of Imam Malik, which is the predominantly followed here in Nigeria, and the reference to Sharia maxims that are known to be Al-Qawaid al-Fiqhiyya. Then sometimes they made reference to the Islamic Fiqh Academy resolutions and the Iifp Sharia standards. Then sometimes they conduct further researches before taking resolutions. In an event when they could not reach any consensus on any of the activities, when they could not make any consensus, they sometimes refer the issue for research till another meeting. This is how they usually conduct their affairs, and it's one of the features of the compendium. Now we come to understanding the resolutions contained therein. As I earlier highlighted that the compendium consists of 44 resolutions, which could be divided into the following headings for easy understanding. Due to the time factor, we may not be able to go through all the resolutions, but we try to look at it in order to x-ray it, as the title suggests, to look at it from about 7 headings. There are resolutions related to card facility, there are resolutions related to wakala, there are resolutions related to mudaraba, there are resolutions related to istisna, ijara, and sukuk. Then there are some resolutions related to reserves and the other aspects of banking operations. And we're going to take about 2 or 3 sample of each of these headings as highlighted. Now let's look at the resolutions related to card facility. When you look at resolution number 1, which was issued, which was resolved in January 2013 in its first meeting, the heading is administrative charges on extending card facility. The background of this resolution is that a card facility product was presented to FRES for review and approval by a non-interest financial institution. FRES resolved that a NIFI may charge administrative costs on the card facility, but as shall supervise and monitor closely the determination of the amount. You see, this is the resolution, that they can charge the administrative fees, but it has to be closely monitored by the Advisory Council of Experts of Non-Interest Financial Institutions. Their basis for this is the Quran, Surah Tawbah, chapter 9, verse 91. Then the resolution of the Council of Islamic Fiqh Academy of OIC, dated October 1986. They also referred to Iifp Sharia Standard number 19 on service charges for card. In a nutshell, it is allowed to charge, but it has to be within the confine of Sharia, and it should not be used as an avenue to charge interest in the name of service fee. So that's why the resolution stated clearly that it has to be determined and closely supervised by the ACE. The second resolution related to this is the charging of COT on current account deposits. This is also very important. It was also resolved during the second meeting, the first meeting of January 2013. The background of this is that first observed that in a product submitted or presented before it, that NIFIs were charging COT on current account deposits, which are based on card. So first resolved that charging of COT is not permissible on the current account deposits. The reason for that is that the Holy Quran, Surah An-Nisa, chapter 4, verse 29, and also they refer to it as allowing NIFI to charge COT will amount to allowing a debtor to impose a charge on his creditor for no valid reason. So this is also banned by the press. The second category has to do with wakala, and the first resolution related to it on the wakala investment product and agreement. NIFI made a submission to FRES on the wakala investment product. So FRES resolved that the proposed structure of wakala investment product is permissible, and they made reference to Quran chapter 18 verse 9 Surah Al-Kahf and Hadith of Umar ibn al-Khattab for trading with the world of orphans based on consensus. Another resolution in the same meeting is the agency fee in wakala agency. It is also as a result of a product submitted to FRES by a non-interest financial institutions, and it revealed that the agency fee is what accrues over and above the expected profit. So FRES resolved that what accrues over and above the expected profit in a wakala cannot be regarded as the agency fee, but incentive fee, because the basis for this is that being unknown, while knowledge of the amount of the agency fee is precondition for validity of wakala contract, as highlighted by the Iifp Sharia Standard number 23. So it's not allowed to just make a vague statement for the wakala. There must be specific fee to be paid by the wakil, by the muwakil to the wakil. So the agency fee has to be specified, but it shouldn't be vague as the what accrues over and above the expected profit. Another resolutions related to the mudaraba, we have about 3 of them related to mudaraba. One is the resolution number 17, which has to do with disclosing the profit sharing arrangement in a mudaraba term deposit, which was resolved in April meeting 2013. The background of this is that FRES observed a mudaraba term deposit product has not clearly stated the profit sharing arrangement of the product. So in this, FRES resolved that the contract should state clearly and without any ambiguity the profit sharing arrangement. The basis for this is the fulfillment of the requirements of disclosure and transparency, because profit is a subject matter of mudaraba. That's its ambiguity renders the contract to be void. If the sharing arrangement is not being specifically stated, that ambiguity may render it to be as al-gharar al-fahish, which is excessive gharar, which is not allowed, and is one of the its avoidance is one of the basic principles of Islamic finance, as we all know. Another resolution is resolution number 21, which has to do with the administrative charges on Mudaraba related services, which was also resolved in April 2013. The background of that is that first observe that a clause that appears to allow charging administrative cost on Mudaraba related services. So charging these, according to FRES, according to the resolution, is that FRES resolved that the management charges mentioned in the Mudaraba term deposit agreement are not permissible, because a Mudarif only has a share of profit as his entire entitlement, as highlighted by the Iifp Sharia standard number 13.8.2 or paragraph 2 subsection 2, paragraph 8 subsection 2. So charging these administrative charges on Mudaraba related services is an added amount that is considered non-permissible by the FRES. Another resolution related to Mudaraba is resolution number 18, which has to do with the Mudaraba laws shall be borne by the depositor except in case of the negligence or breach of investment mandate by the non-interest financial institution. Press observe in an agreement that loss incurred in handling the Mudaraba funds shall be borne by the depositor. Press resolved that depositor in a Mudaraba term deposit shall bear loss except in cases of willful negligence or breach of investment mandate. So Mudarif, the reason for that is that Mudarif is a trustee, and a trustee should not be held liable for losses. Thus, losses must be borne by the Mudaraba funds, as highlighted by the Iifp Sharia standard number 13. What Mudarif usually lost in case of loss is he lost his time, his energy, and his technical know-how of the business that he has demonstrated. So this is the resolution regarding these are the resolutions related to Mudaraba. Another set of resolutions has to do with istisna. Resolution number 8 was talking about making a parallel istisna contract contingent to or open the first istisna. First, observe a clause in an istisna product that seeks to make a parallel istisna contingent upon the first one, and press resolved that this clause be removed because it is not allowed to link between the two contracts, that is the parallel istisna. Such contract will amount to joining two sale contracts in one. Linking the two contracts has the effect of making the arrangement into an interest-based financing, because it will be an avenue for charging interest, so that the risks attached to the istisna will now be avoided by making the parallel istisna contingent to the first one. Another resolution related to istisna is resolution number 14, which has to do with the charging istisna price during the currency of the istisna contract. Press observe a clause in the contract that seeks to change the istisna price during the currency of the contract. So it resolved that the clause is invalid and the istisna contract price cannot be changed. And they made reference to Quran chapter 5 verse 1, Surah Al-Ma'idah, Ya ayyuhalladhina amanu awfu bil-uqud, and that istisna is a sale contract and the selling price once agreed upon cannot be altered. So they also made reference to our Sharia standard on istisna number 4 subsection 1 paragraph 3. Another resolution related to istisna is resolution number 15, which has to do with the charging actual expenses arising from the customer's delay in taking delivery of the istisna asset, which was also resolved in the April 2013 meeting. First observed a clause seeking to charge expenses in the event of the customer's delay in taking delivery of the istisna asset. First resolved that a Iifp has the right to charge but shall be set under the supervision of the NIFI's Advisory Council of Experts to avoid any arbitrage in case of charging this cost. The fiqh maxim of harm shall be eliminated. La darara wa la dirar, and any fee in addition to actual direct expenses is prohibited because it amounts to consuming wealth wrongfully. Aklu amwal nasi bil batil. It's prohibited in the Holy Quran. Now, let's look at other resolutions that are related to lease, ijara. Resolution number 4 to number 24 about making an ijara contract contingent on opening a current account in a non-interest financial institution, which has to do with the resolution of January 2013. Press observe a clause in ijara product that seeks to make entering into an ijara service contract with the non-interest financial institution contingent on the opening a current account with it. So it resolved that entering into that ijara contract with a NIFI as a contingent on opening current account with NIFI is not permissible, because current accounts of NIFIs are based on the contract of Qard, Al-Qard al-Hasan, which is a loan. So it will lead to combining a contract of loan and sale of ijara. And the Prophet Sallallahu Alaihi Wasallam prohibited combining a sale with a loan. Another resolution related to ijara is number 25 on unilateral cancellation of ijara service contract by one party. A NIFI submitted an ijara service product and press observe a clause that seeks empowerment of the NIFIs to unilaterally cancel or terminate the contract. That's why it resolved that ijara is a binding contract and one party cannot unilaterally cancel or terminate it. And the basis for this resolution is that in Sharia, no party shall unilaterally modify or cancel any of the terms or conditions of the contract without the consent of the other party, as is being stated in Quran chapter 4, verse 29 and Quran chapter 5, verse 1. The Prophet Sallallahu Alaihi Wasallam says in another hadith, Muslims are bound by their stipulations, al-Muslimuna ala shurutihim. So these are the two resolutions related to ijara that we cite to serve as an example in the compendium. Another set of resolutions has to do with the reserve. Resolution number 19 on the creation of Mudaraba Profit Equalization Reserve, what we call Mudaraba PER, Profit Equalization Reserve. First, observe that the creation of the Mudaraba Profit Equalization Reserve to adjust loss from income in a product submitted before it, and it resolved that a non-interest financial institute may create Mudaraba Profit Equalization Reserve or even IRR, Investment Risk Reserve, to cushion against future investment losses. And this is based on the initial premise of Sharia, that Sharia is not averse to anything that brings benefit to people. Allah subhanahu wa ta'ala in Quran chapter 2 verse 172 made it that ya ayyuhalladhina amanu, Allah subhanahu wa ta'ala in the Holy Quran stated that whatever is good, it is being permitted for you. Another explanation on this is that PER, Profit Equalization Reserve, is taken from the gross profit, while the IRR is taken from the share of the depositors. Both are considered as risk mitigation mechanism or techniques in order to cushion the effect of the loss in case if it occurs. As you know, that the Islamic finance, the cardinal point is about the profit and loss sharing. So we are always anticipating the profit, but in case of the loss, how will we do? Anybody who approaches any non-interest financial institute comes with the motive of getting profit. But what happens in case of loss? So this is one of the techniques to mitigate the risks and the loss in case it occurs. It can be through Profit Equalization Reserve, and it can be through Investment Risk Reserve, IRR, and both are allowed according to this resolution number 19 by the press. Another resolution related to reserve is resolution number 26, which has to do with the use of reserves in the Mudaraba investment accounts, which was resolved in July 2013. And phrase received or conducted a research on the use of reserves in Mudaraba. Sequel to the earlier meeting, they decided that more researches are to be conducted on the Mudaraba investment account, particularly what has to do with the reserve. So press resolved that a non-interest financial institute can adopt the practice of using profit equalization reserve or investment risk reserve in both unrestricted and restricted Mudaraba contracts. Both are the reason for that is that the two mechanisms or the two systems, the PER, profit equalization reserve, and IRR, investment risk reserve, are risk mitigating techniques that benefits the parties to the Mudaraba. And Sharia is not averse to anything that brings benefit to people, as we highlighted earlier in Quran chapter 2, verse 172. So these are the resolutions related to Mudaraba, to reserves. Another set of resolutions are related to Sukuk. There is one resolution in the compendium which dated back to one of the topical issues at that time, which is the Osun State government istisna/ijara Sukuk, which came served as a turning point in the history of the Islamic finance in the country, because it is the first ever sovereign sukuk or sovereign sukuk in the country that is being issued by the Osun State government of 10 billion for the construction of educational facilities in Osun State during the then State Governor Raouf Ogbeni Aregbesola. So that was the issue, as we've said, that one of the mandate of the press is to give clarification by either submitted to it by either CBN or any other sister regulatory authority, be it SEC, NDIC, PENCOM, and the rest. So this one was presented by SEC and on the structure and the documents proposed 10 billion fixed rate Sukuk al-Ijara of Osun State, seeking its opinion on the Sharia compliance of the issuance. Press resolved that the Sukuk may only be freely tradable after the beginning of the construction of the school units, when the Sukuk will present a pool of cash and landed asset. This is very important because in Sukuk, once it is Sukuk al-Ijara, if the construction does not commence, the Sukuk, the papers that represent that Sukuk represent only cash, and the certificates before the commencement of the construction represent the proceeds of the Sukuk issuance, which is money held by the issuer in trust for the Sukuk holders. Thus, it cannot be traded, and if it is traded, it is only be traded on the basis of exchange of cash for cash. That is based on the exchange, and all rulings governing this has to be observed. Otherwise, it could be exchange of cash with addition, which is automatically usury, which is riba, and it is not allowed. So that's why this resolution is very important. Whenever we're talking about any sukuk, once it is sukuk al-ijara or istisna, it can be traded, even if it is enlisted in any of the trading platforms of the country. For example, it is enlisted in the NGX platform, or it is part of the Lotus NGX index, as the case may be. Once it is not the construction does not commence, it can't be traded on any trading platform because it represents cash at that particular material time. Unless when the construction commences, this is when it represents a pool of cash and landed asset, and at that time it can be regarded as something that can be traded. So this is the resolution number 4, as been provided by the compendium. Another set of resolutions had to do with other banking operations, and resolution number 6 has to do with the investment of accrued interest in the equity holdings of a non-interest financial institution by a foundation created by it. And this resolution was made in April 2013. First was requested by a NIFI to review a decision of its S on disposal of its non-permissible income, MPI, as the foundation's shareholding equity in the NIFI. So this is very tricky. You can see the non-interest, because of the diversity and the nature of the secular system we are living. Sometimes a non-interest financial institution, rather an Islamic financial institute, may enter into a contract with another interest-based financial institute and got some income. What is obtainable is that whatever is realized through that contract, it has to be disposed to charity through or under close supervision of S. So now is another tricky that is being submitted by a non-interest financial institute, trying to recycle the proceeds of non-interest financial income, non-permissible income that accrues. They are now trying to benefit from it, so that the ace of that financial institute has already made it permissible to do so, and they referred it to FRES as a body that is superior to the S, and first result that a NIFI should not benefit in any way from from non-permissible income, and the NIFI is under an obligation to deposit to charity, and the S should, as matter of urgency, monitor such disposal to make sure that it is not being included. It has been off record. It has been read off the balance sheet of the non-interest financial institute, and they made reference to the fact that FRES regards this as a device to justify making use of non-permissible income by NIFI. The Maliki School of Jurisprudence gives consideration that to what leaves possession and comes back to it. So the resolution of Council of Islamic Fiqh Academy of October 1986 is very specific in stopping this. Another issue or resolution related to the banking operations is the treatment of pre-licensing interest income, which was submitted in July 2013 by a NIFI requesting for approval from FRES to benefit from pre-licensing interest income for only the balance outstanding of the interest income after licensing to be gifted out to the charity. So this is another trick that they have a short of balance, which is expected to form their capital base. So they now requested that they should use it to read part of their balance, but actually they don't want to, they are not going to use it. They will settle it or dispose it to charity in a later day. So considering the situation, FRES resolved that the interest income that was generated by the entity that was not non-interest financial institution is also not permissible for a non-interest financial institution. That is being accrued before they got licensed to be non-interest financial institution will not allow them to be justifiable. Therefore, they must dispose it to charity as it is being established. But because of the necessity, which is darura, the delay in remittance of the non-permissible income to charity over a reasonable time frame is allowed. And that has to also be monitored closely by the advisory council or committee of experts to make sure that it is not being delayed deliberately. The resolution of the Council of Islamic Fiqh Academy of 1986 also stands on this matter. So in general, these are the major resolutions provided by the compendium, just to serve as a case study. We cannot exhaust all the 44 resolutions, but as I earlier highlighted, they cover across all these sectors. We are rounding off, we have to look at the potentials of these resolutions contained therein in the compendium. One of the major potentials is that harmonization of Sharia interpretations. The document will definitely promote harmonization of Sharia interpretations in Islamic finance industry, because once we have an upper authority that make an interpretation of a particular ruling, it can easily be referred to, and any other similar to it at the regulatory level or lower to it at the institutional level may refer to this interpretation. It will also strengthen the regulatory and supervisory oversight of the phrase because of the industry, and will also foster and nurture a pool of competent Sharia advisors. They are going to be trained, and any prospective Sharia advisor at whatever level may benefit from this document. It will also boost public confidence in non-interest financial institutions, thereby strengthening the industry. By boosting the investment of non-interest finance sector, the country considering Nigeria large Muslim population. So releasing this document will give public more confidence that really the Islamic finance is institutionalized in the country, and it is being backed by all legal frameworks, and it is being backed by so many regulations, and it's been backed by prominent scholars who are knowledgeable in Sharia and have a very competent understanding of modern banking operations or non-interest or financial operations. So another potential is the provision of sole Sharia authority in Islamic finance. With the release of this document, the phrase could be referred to by the court of arbitration or any arbitrator in the dispute involving Sharia issues in Islamic banking and finance cases. This is also very important. We have a reference material. This could be regarded as some proceedings, and it could be referred to for making any legal judgment in court or by arbitrators. Another potential is the deepening financial inclusion. As we all know, the Nigerian financial exclusion rate is estimated at 37%, with large exclusion observed in the northern part of the region, largely on ethical basis. The financial exclusion is largely on ethical basis. So releasing this document and boosting the public confidence and strengthening the regulatory and supervisory oversight of the industry will indeed deepen the financial inclusion, where more people will come on board and join the formal financial sector. And lastly, but not the least, is the correction of so many misconceptions of Islamic finance. As you all know, there are so many misconceptions on Islamic finance by the general public, by one side, intra and inter-religious misconceptions. The inter-religious is that is as a result of our religious sensitivity in the country, where many people tend to perceive whatever action being done from religious perspective. So you can see how many hula balus were raised during the introduction of the or release of guidelines of CBN in 2011. As it was regarded by some as a wins or as a way of Islamization of the country, which actually has nothing to do with that. But as time goes on, after 10 years now, we can see that this misconception is automatically or naturally disappearing, because we have so many non-Muslims who are having a larger shareholding in the Islamic financial institutions or non-interest financial institutions in the country. And the intra-misconceptions of Islamic finance also will be remedied through this compendium, which are within the Muslims. Some Muslims are looking at it, even among some Muslim scholars are saying that there is no difference between the non-interest or the Islamic finance and the conventional finance, which is actually not true, because we can see the differences are enormous. And this particular document that is coming from the Apex Bank indeed will clarify more issues for those that did not understand, because it's coming from an authoritative source. So these are some of the potentials contained therein for the compendium of the resolutions of FRES under watch of the Central Bank of Nigeria. In conclusion, indeed, this compendium contains about 44 different resolutions basically related to Wakala, Ijara, Mudaraba, Istisna, Reserve, sukuk, and other banking operations. To straighten the resolutions, the compendium also contains the basis and justification for each of the 44 resolutions contained therein, as we've just highlighted. Sometimes it made reference to Quranic verses, sometimes to hadith, sometimes to opinions of scholars, jurists, particularly at the Maliki School of Jurisprudence, considered the most, or the predominantly followed school of thought. And sometimes they make reference to some resolutions of fatwa bodies like International Islamic Fiqh Academy, and mostly it made reference to Sharia standard of Iifp. And for information, it is important to note here that the Central Bank of Nigeria has adopted Iifp resolutions or Iifp standards as one of the guiding principles of Islamic finance in the country, being a member of the Iifp, and also adopt the IFSB, and it cuts almost all across the components of the industry. SEC did the same, the Securities and Exchange Commission, I mean, so also the NICOM, Nigerian Insurance Commission, also did similar. And recently, the PENCOM, while it releases its Sharia governance guidelines, it also spelled out actually specifically that reference is to be made to the Iifp standards. And this is also very important. So this resolution actually deepens Sharia compliance not only in the non-interest banks, but in all other non-interest financial institutions in the country. Therefore, there is need for no innovation and additional researches on non-interest financial products and services, considering the nature or novelty of the non-interest finance in the country, though it celebrates its decade or its first decade, but still much need to be done. At the end, it is recommended that regulatory bodies, CBN, NICOM, SEC, PENCOM, etc., other stakeholders and industry players, as well as religious bodies, they ought to continuously organize seminars such as this one that is being sponsored by our dear institutes of Islamic Finance Professional and Chartered Institute of Stockbrokers of Nigeria, as well as trainings, lectures on the non-interest finance, to create massive awareness to the general public and to equip professionals on this particular noble profession. So thank you very much. This is my take. And I also once again appreciate the two institutes, the Chartered Institute of Stockbrokers and our dear Institute of Islamic Finance Professional. Thank you once again.
Thank you very much, Professor Inshallah, Dr. Adam Abubakar, for that lecture. And I think this has been a very loaded, yet it has been very summarized in order to allow us and catch up with time. I want to, at this point, quickly mention one of your conclusions, sir, which is towards the end, saying that there is also need for more innovation and additional researches on non-interest financial products and services, considering the novelty and the non-interest financial in the country. I think this is a very important note for every one of us here present to see the need to jointly or individually carry out more researches in this field. And for the fact that this is emerging in a way, and also at its nascent, there's need for us to do a lot more in the industry in order to create more products that are going to be Sharia compliant, and also in order to, Islamic finances for welfareism, to ensure that the welfare that we want to put across to people really manifest. I'm going to go straight to question and answers, and I'm going to allow for just 2 questions for the fact that we have spent much time in this session. We're going to allow for 2 questions, 1 question from a male and a question from a female. Every other questions can be dropped in the chat box where the questions are going to be answered by our doctor. If you have any question, a male and a female, kindly signify so we can take that question. While we are waiting for the questions, I will also want to mention, to remind those that are just joining us, that this is a joint training on Islamic banking and finance organized by the Institute of Islamic Finance Professionals and the Chartered Institute of Stockbrokers. We are going
Assalamu alaikum.
So, hello. Sorry for the breaking transmission. I want to move on while we allow questions to be asked inside the chat box. Kindly ask your question in the chat box and are going to be attended to by Dr. Adam. The next line of item, which is to invite Mr. Chukwudi. Mr. Chukwudi is a chartered stockbroker and a fellow of the Chartered Institute of Stockbrokers, and is also the head of the CIS Academy. Mr. Chukwudi is going to be, thank you, welcome, sir, is going to be reading for us the profile of our second lecturer in person of Mrs. Oyindamola Dada. So let's have Mr. Chukwudi.
Thank you so much, the moderator. It's indeed a pleasure to be part of this collaboration. We all know that the Islamic finance is actually growing in importance, both locally and internationally. As professionals in finance and banking, it's only proper that we get very conversant with it, take advantage of the opportunities also associated with it that is growing every day. So having said that, I will want to introduce our next speaker, who is going to speak on how Islamic banks how Islamic banks in driving MSMEs growth and development. To handle this very important topic, the Oyindamola Dada, ACCA, BSc, PGD, MA, MSc, AFHDI. Oyindamola Dada is a seasoned banker and an Islamic finance enthusiast. She started her career with First Inland Bank, now FCMB, as an executive trainee with the credit and marketing department. She then moved to Guaranty Trust Bank, where she worked with the risk management department. Her dedication, hard work, and brilliance saw her rising to become the unit head of the Consumer Credit Risk Department. Being a devout Muslim, emergence of the first non-interest finance institution, Jaiz Bank PLC, saw her joining the bank as the head of Credit Risk Management Department under the Risk Management Directorate. In her capacity as the head of Credit Risk Department, she helped in policy manuals, in setting up the bank's products and product manuals, implementing and coming up with regulatory policy manuals, parameterizing the system to conform to both Sharia and regulatory requirements. After the successful setting up of the Risk Management Department and following the issuance of national license to Jaiz Bank, she transferred to Lagos, where she headed the first Jaiz Bank branch at Ikeja. And she doubled as the acting regional manager whenever the need arises. She joined Lotus Bank in December 2020 as the head of Sharia department, and she also doubles as the group head retail banking. Currently, she is the MD CEO of Caravan Consult and SPV for the establishment of the proposed Caravan Non-Interest Finance House. Oyindamola attended the University of Ilorin, where she obtained her bachelor's degree in biochemistry, a second-class upper division. She has a second degree in applied accounting from Oxford Brookes University in the United Kingdom. It's a second-class upper division also. She has her PGD from the Institute of Islamic Banking and Insurance in the United Kingdom, and her Masters of Arts degree in Islamic Banking and Finance from the University of Gloucestershire, United Kingdom. A chartered accountant with the UK accounting body, Oyindamola became an APCE member in December 2012. She has a Master's of Science degree in Finance from the University of Leicester in the United Kingdom. She's a certified finance auditor, Islamic finance auditor. Ladies and gentlemen, you can see that Oyindamola is very, very qualified to do justice to these topics. And it's my pleasure to welcome you to take over the lecture. You're welcome, madam.
Good afternoon, sir. Thank you so much for that, sir. If you can make me the host now so I can share my screen, the admin.
Yes, I co-host already, ma'am. You can go on.
Thank you.
Yeah, thank you.
Can you all see my screen?
Yes, clearly.
Okay, once again, good afternoon, everybody. And I thank the Institute of Islamic Finance Professional and the CIS Academy for this opportunity to discuss what the Islamic banks are doing to drive MSME finance, MSME growth and development. Yes, so in doing this, I'm going to be looking at it from two perspectives. Number one, the roles of Islamic banks in driving MSME growth. And in looking at the roles, we are going to be discussing what Islamic banks are doing, why they are not doing what they're not supposed to be doing if they're not doing it, whose fault is it, how can we remedy it. All these are what we're going to be discussing in the course of this transaction, of this discussion. And then we're also going to be looking at how Islamic are the Islamic banks. How do we increase public perception, public confidence in Islamic banking products and services? So yes, what does Islamic finance mean? Okay, I must say here that in the course of my presentation, I'm going to be using the term Islamic finance and non-interest finance loosely because they're basically the same thing. So Islamic finance is a financial system that is in consonance with the spirit and ethics of Islam, and it is governed by principles laid down by Islamic Sharia. We all know that it takes its root from the Quran and the Hadith. There are so many verses of the Quran where Allah has spoken, advised against riba, has spoken against riba, and has even told us about the sin, sin that is involved in riba. So it is not, at this point, it's not debatable that interest-based financing is haram. So Islamic finance takes its root from the Quran and the Hadith, as we'll see going forward. So quickly, for us to appreciate non-interest finance, let's quickly talk about the goals of non-interest finance. I know most of us here are not Islamic banking experts, so I'm not going to spend too much time on this. The first one is the profit and loss sharing. In Islamic finance, this is the bedrock of Islamic finance, profit and loss sharing. In this, what it basically means is two people come together, they agree to do the business. Whatever profit that is made from that business, they will share it as agreed. And if there's any loss, they also share the loss. Another important goal of an objective in Islamic finance is risk sharing. There shall be no reward without sharing in the risk. So this one means that whenever we are doing business, for you to be able to earn a profit on that business, for you to be able to earn any reward on that business, you must share the risk. Prohibition of riba, we have discussed this earlier. It is unequivocal that riba is not allowed. It has no room in Islamic finance. So it's one of the major goals of non-interest finance. Gharar is also known as uncertainty. It is not allowed in Islamic banks or in Islamic finance to go into transaction that you are not sure of. It's meant to protect your funds. If you see where all these goals are coming, where they're coming from and what they intend to achieve, you see that it's intended to protect the economic activity of a nation. So Gharar means you're not allowed to do any transaction that you are not sure of. Before you go into any deal, you need to be sure of it. You need to have adequate experience in it. Maisir is gambling. I'm sure one of us or almost all of us have a horrible experience, or maybe family members that have we have seen first class the ills of gambling. There's nothing good that comes out of gambling. So prohibition of this one is a no-brainer. Monopoly simply means one person taking advantage of a particular product or economy or situation. So there's not, once a product or an activity is in the hand of one person, then this person has the right to manipulate it as much as he wants. So prohibition of this is also to save the economic activity of a nation. Unethical activities are prohibited, smoking, hard drugs, prostitution, and things that do not add any economic value to a country. So in all this, you can see that it encourages real economic activity. As we go on, we begin to see how this integrates with the SME, because in discussing SME, there's no how we can discuss it without all these elements being needed for them to succeed. Now, let's classify Islamic banking products by what they do. The first one I will talk about is the profit and loss sharing. Most scholars say that this is the bedrock of Islamic finance. This is what Islamic finance is precipitated on, profit and loss sharing. And what this simply means is two parties come together to do a business and they would have agreed on how to share the profit. If the business succeeds, they share the profit. If unfortunately there's a loss in the business, they also share the loss. So this is a risk and reward sharing system. Trade financing. This is the most popular product in Islamic finance. And it basically works like the normal trading in the markets. Just like you can go to the market, as a trader, you buy your products, you add your profits, you sell at a profit. So also, this is what Islamic banks do. Whatever it is their customer needs, they will buy that thing, they would add their profits and then sell to that customer. The customer gets to know the profit and the amount it is being bought. this amount that is being bought cannot change. Once it is agreed, once the sales price is agreed, it is fixed. And this is the major difference between this and the normal conventional bank. Even if the facility goes delinquent, meaning the customer did not pay as at when due, it is not allowed to earn interest or compounding interest on this. Lease financing works like the normal lease financing in normal lease to own that we are all used to. It is used to usually buy immovable item where the bank can buy an asset for you, and then you pay rent gradually until you finish paying the facility, the product off. Loan, called Asan. This is basically the only time the word loan is allowed in Islam, and it is free. You give 1 million, you collect back 1 million, no more, no less. When the other lecturer was talking about the compendium of fatwas, he mentioned Qard Hassan, and he said it is not allowed by CBN to charge COT. This product is mostly used for the current account in banks. Other services include kafala. Kafala means guarantee. That's what the banks use to issue their bonds and guarantees. Now, to quickly classify this by usage, for financing, these are the products that Islamic banks use: Muraba, Ijara, Musharaka, Istisna, Salam, Musawama, and Bay Muajal. And we've heard earlier, most of the fatwas that relate to this transaction. And for deposits, Muraba, Mudaraba, Musharaka, and Wakala are used for savings and term deposit accounts, while the card is used for the current account. Other services, they use kafala for bank guarantees and stuff. Now, what are the advantages of Islamic finance? It is a more inclusive form of financing. Gone are the days where you just, what we are used to, that you just go to a bank, I need funds, or your salary is domiciled with me, or you have enough money, how much do you need? 10 million, I take the 10 million. You don't know what you're using the 10 million for. You don't know if you're going to go and blow it away and then come back poorer than and then by leaving you poorer than we actually met you. But now in non-interest banking, it's a more inclusive form of financing. You see a lot of questions asked. What do you want to use these funds for? How much profit are you going to make from this transaction? How do you intend to pay us back? Who are your buyers? Who are your suppliers? And then they do not pay you the funds. Whatever it is you want to, they finance. They either pay for the products, buying it, or they pay for the services and stuff like that. So you don't have access to funds. In doing that, we will see that it ensures economic development, because whatever it is that you want to use the funds for is what you're actually using it for. It does not give room for misappropriation of funds. And for the cherry on top, it is Sharia compliance. We have so many people that have not been able to become financially included because the conventional finance, as it were, is not in line with their beliefs and faith system. So this ensures that they add value economically whilst staying within the confines of Islam. Now, it's not without its own challenges, though. It is new. Because it's relatively new, it's a bit difficult to grasp, especially for us here that will not be used to all the terms and terminologies of Islamic finance. You will see that we have some customers of the banking industry that have been there for like 10 years, and they still use the word interest, they still use the word loans. They still find it difficult to understand what Muraba and Musharaka mean. So it's a bit new and difficult to grasp and understand, but gradually this is changing as the banks become more, as the publicity becomes more, people are beginning to understand, are beginning to get curious as to what the product is about. And in some cases, it may be more expensive. And this I would explain briefly. Normally, if you are a normal bank, a conventional bank, and you have your excess funds, number one, you can put your excess funds in overnight placement, you can put it in treasury bills, you can earn legitimately the compounding interest, and I'm sure in some cases, some banks, compounding interest may even be more. It forms a significant part of their profits. But for an Islamic bank, we don't have all of that. We don't have overnight placement. Now we have Sukuk that mirrors, that's a Sharia compliant version of the treasury bills, but it's still not as liquid and as widely available as the treasury bill. Unfortunately, the cost that both banks, both system of banking, the cost that they incur is the same thing. So definitely there has to be something that would give, just so that the Islamic bank can adequately cover their cost and make more profit. It's still not widely available. We have about 3 Islamic banks now. And these 3 Islamic banks, I can still say that when you go to Ekiti State, you don't have any Islamic bank there. When you go to Osun State, most of the Southeast. So it's still not widely available, and we can do more. Then there's more process required. In these days of, you can just click an app on a bank. Banks are telling you have been pre-qualified. You can you can take 300,000, you can take 5 million naira, and then just at the click of a button, the money is available in your account. Meanwhile, you cannot do that at an Islamic bank. It has its processes and procedures that ensures that it is Sharia compliant. So there are more processes required in Islamic finance. Now let's go to MSMEs. MSME definition is in terms of number of employees, the total assets, and the annual turnover. It varies according to some institution, but this is the BOI's definition of MSME. Number of employees should be a maximum of 200, total asset of 500 million, and annual turnover of 500 million. This sector is a very important sector in any economy. They contribute 48% to the GDP of Nigeria. Imagine a whole 96% of businesses in Nigeria fall under MSME, and they contribute 84% employment in the country. And in absolute figures, we have 41.5 million MSMEs in the country. It is said that for any country to move from maybe like a third world like us to a second world, you need to take very seriously your MSMEs, because they are the ones that will grow your economy and they will grow into the full-scale industry tomorrow. So in spite of all this wonderful contribution, all this significant contribution we have on this, in accessing financing, in sourcing for funds for these MSMEs, there's a survey conducted by PwC that says 50% of those people that approached a bank for financing refused the offer due to the cost of financing. 31% were rejected by their bank. Only 10% applied and got full funding, while the other 10% applied and got half funding. Imagine 81% of MSMEs that were interviewed could not have access to financing. So we can only see what would happen if these 80% have access to financing, how this industry will grow, how the economy will bloom, how employment will grow, because as they are growing, they are expanding, they are employing more hands. But unfortunately, this is not so. Why? So we'll briefly look at the factors that impede on the availability of credit for SMEs. The first one I will talk about is regulatory requirements. This is a double-edged sword. According to regulation, there's a minimum amount of documentation you require or collateralization you require for any facility. If you want to give facility to people, you must have a collateral. If you don't have a collateral, you are required to make 100% provisioning immediately. And what this means, let me quickly say it is, provisioning is if your facility is going bad, maybe you give a customer a 1 million and the 1 million has gone bad, you will take the 1 million off of your profits and keep to replace that 1 million that has gone bad. Because do not forget, the funds you are financing customers with are depositors' funds, and you need to keep it safe. So provisioning is always required for any delinquent financing. Now, if you have a financing that is not collateralized, you are required to make 100% provisioning on that account. And banks don't like to keep profits, keep their money, profits aside and not declare it. So what would happen? They will refuse to finance people without security. Meanwhile, these MSMEs, we all know them, they do not have security. So the regulators need to deliberately start changing the paradigm. They need to change some of these rules and requirements to favor banks financing MSME. I'll tell you something that happened around 2014 when Sanusi Lamido was still the CBN governor. Then this NERSAL agri financing came out. And NERSAL is Nigerian incentive-based risk-sharing agricultural lending system. The system is just to encourage banks to invest, to finance the agri sector. And CBN has come to say, okay, I will guarantee 75% of whatever loans you give to anybody in the agri sector. And the bank asked, what happens to the 25%? Tanisha said, no, you need to take risks too. 25% is enough risk for you to take, and 75% is what we can guarantee, and that is it. You know what happened? After 1 year, they came back, and the banks have not financed this agri sector. Tanisha, let me have to call them back and tell them that now you have shown us that he who pays the piper dictates the tune. So what we are going to do is allow you to take collateral for that 25%, because you are the one that said I should not take collateral for 25%. If this 25% goes bad, you are still going to charge, penalize me, take provisioning for that 25%. So, and number two, no central database. And we don't have a credit scoring system in Nigeria where you can just click on and then you begin to get to know, you have a credit idea of the credit score or the credits, how these people behave when they take credits. Although we have the credit bureaus now where you can go ahead, do searches, and then you see people that are not that have facilities that are not performing. But some people still have found ways to beat the system. I'm sure we've all, in one time or the other, gotten that call. Your friend, your friend, has taken 10,000 naira from Kineko and has not paid back, you know? And it's still because people still find a way to game the system. To resolve this, CBN has come out with the Global Standing Instruction, GSI. But this Global Standing Instruction is still resident with CBN and is still not as widely used as it should be. The Global Standing Instruction is meant to utilize your BVN. So if you take facility from Bank A, for example, and you don't pay back, and you can open an account in Bank B and keep your funds there. Global Standing Instruction, they can invoke it and then take funds from whatever bank that you have money and use it to repay that bank you are owing. So once this one is up and running and is adequately domiciled in all banks, we will see that banks will begin to take more seriously credit financing the SMEs. Now, we also have some credit guarantee companies that are coming up to say, okay, don't worry, portfolio of MSME financing, MSME loans, we are going to guarantee it so that you don't have to have so much apathy towards financing this sector. We have the Development Bank of Nigeria, Impact Credit Guarantee, Africa Guarantee Funds and stuff. And it doesn't help that some of these MSME owners too, they think it's their own, whenever they take financing from the bank, they think it's their own share of the national cake. I mean, from experience, this is an experience I'm going to share. There was a particular state that they went to finance the SMEs there. And they were calling each other that you're not going to take your own. They are sharing money. Meanwhile, they know quite well that this is a finance. I mean, they signed off a letter. They were told how much they are buying the products, how much the products are being sold. And they still feel it's a national cake factor. 80% of facility in that particular area went delinquent. We have insufficient Sharia compliant alternatives. We have said that Sharia Islamic banks are still not widely spread. So there are still some places that people will still not bank because they don't have the Islamic finance alternative to doing business. Now, MSMEs, they mostly do not operate formally. I mean, Yabisi would in the morning buy products of 500,000, sell in the afternoon. The following morning, they take it to the market, they sell in the evening. You know, they go on, they repeat the cycle like that, and they do not in any way go through the banking system. So if at any time they need financing and they come to the bank for financing, it becomes difficult to assess their financial capacity because they have been excluding themselves from the formal banking sector. High financing rates. About 22% or about percent of customers that were surveyed said that high financing rate is the major reason why they won't go to the bank to get financing. Unfortunately, when you're pricing, or coincidentally, when you're pricing your finance, when you're pricing your facility, you look at your risk before you price. The higher the risk, the higher the reward. Now, we all know that from what we have discussed earlier, MSMEs are a high risk industry. So naturally, some banks will price higher than what they ordinarily price. And then this is detrimental because people are refusing to take financing based off of this. Also, there are some mistakes entrepreneurs make. When you want to go to a bank, you just tell them, oh, they have this mentality that is an Islamic finance. Whenever they go in, I mean, I'm a Muslim, I'm coming to you, then so you should finance me. It doesn't work that way. Some of them also go with a business plan. They have no prior experience. I have an idea. I've reviewed it very well. If I go into poultry in 1 year, I'm going to make this. And they come with a beautifully binded business plan with no prior experience. And the way it is, even you don't know if this business is going to succeed. And CBN also says you cannot finance any business that is less than 1 year old. The business needs to be more than 1 year old. So they are sure that you know what it takes to run the business. You have had your experiences, your ups and downs, and you are able to run the business well with your experience. And also, some people also make the mistake of going to the bank only when they need financing. You see them keeping all their funds in conventional bank, and once they need financing, they come to an Islamic bank. And it doesn't work that way. There has to be a relationship before you can access this financing. So because of that, what can MSMEs do to ensure that, I'm still going to come to what Islamic banks would do to promote and to enhance MSME financing. But let's start with what can MSMEs do to ensure that they are ready for financing opportunity. The first thing is to open an Islamic bank account immediately. Some of us in this room here, if we are asked to take a survey of how many people have Islamic banks accounts here, I'll be shocked if we have more than 50% having an Islamic bank account. So once you know that you cannot go to a conventional bank to access financing, so open an account with Islamic bank. It's called emotional bank account. If you want somebody to finance you, onus is on you to also do your own parts in that. Make sure you run the account well. Ordinarily, in all your apps, you see your account officer. Make acquaintance with your account officer and the branch manager. Go there once in a while, say hello, let them understand your business when you don't need facility. Keep proper banking records. Make sure all your transactions go through the bank. Keep proper financial record. At the minimum, how much are you buying? How much are you selling? In that way, you are able to know your profit. So that whenever you approach an Islamic bank, it becomes easy for them to understand what you do. I've had a reason to go into a customer's because we wanted to see what the customer makes on the transaction. And although they don't have this financial, all this beautifully binded official financial statement of accounts, but I was able to go into the customer's record, extract everything they have sold in a year, extract everything they have bought in a year, and I was able to come up with the profit they've made. So even those simple records also matter. And then one thing I've also noticed is there are some people that when you do a credit search, you see that they are owing a particular bank, and they tell you, oh, I've not been using that bank for a very long time. It's accrued COT. So whatever bank you're not using, please close it so that you don't have all those COT, inspired debit, SMS alert, inspired debit and stuff. Also follow the right handles, CBN, NASA, Bank of Industry and stuff. They all post all these opportunities from time to time. What are the supports that are available for MSMEs? The first one is family and friends. I mean, if you are at the developing stage, the idea stage, it only makes sense that you go to your family, those who believe in you, in your business acumen, in your integrity, for them to finance you. Then the second is the banks. Once you have gone past the family stage, you've seen that you need to expand, then you go to the banks. Also, there are so many regulatory funding in place. The BOI, we have the Youth Empowerment Scheme, we have the LSCTF, the GrowFin, UWin, CBN, and stuff. I'm going to talk more about them in this slide. What are Islamic banks doing to advance the cause of MSMEs? Most of these banks, they have the products there, just waiting for us, waiting for the MSMEs to come and take them. Jais Bank, they have some facilities that are in partnership with BOI. I know Taj also had their trading finance facilities for small business owners. Lotus Bank has a dedicated desk, and they have some amount dedicated with special rates just to ensure that these MSMEs are adequately funded. Almost all NIM, non-interest microfinance bank, they are created to fund MSMEs. For CBN, we have all these non-interest intervention funds, about 8 or 9 of them, MSME development funds, accelerated agricultural development funds, intervention in the textile sector that seeks to fund all the value, all stages of the value chain, from those people that produce, those people that sell, to those people that sow. Agribusiness, ageism has been there for ages. We have all of this. So what exactly is the problem? MSMEs said only 15% of MSMEs go to banks for funding. And out of this 50%, only 20% of them are funded, from what we have seen in the slide earlier. Imagine 20% of 15 is 3%. So it means in this whole, in Nigeria, with 41 point something million MSMEs, just 3% of them are getting access to MSME funding for reasons that we have discussed above. Some of them would prefer to go to source equity, and some of them would prefer to go to family and friends. Are Islamic banks doing enough? There's a saying that once two sisters go into the room, they come out laughing, they've not told themselves the truth. But if they come out frowning, then something has hit the right spot. The truth is no. Islamic banks are not doing enough yet. There is the drive, there is the willingness to do it. But why is not being done? There has to be a calculated, a deliberate attempt to change the narrative. Number one is promote equity-based financing. I said earlier that everything Islamic bank promotes, everything Islamic finance, non-interest promotes in Sharia, in everything, all those goals and objectives listed earlier, is like it is meant for MSMEs. I mean, you are involved in what they are doing. You have your expertise. You are giving them your expertise. You are ensuring that you don't pay them so that they don't embezzle the money. You are involved in the transaction. So all these ones are what MSMEs need to grow. So we also need to promote more equity-based financing, meaning that whenever they come to you for business, get more involved in their transaction. Let us not get lazy with using the trade-based system that is very similar, that is like the most similar to the conventional system. So we have gotten so complacent that anybody that comes, we just do murabaha. Okay, how much are you buying the product? 10,000. I'm selling it to you for 12,000. In 2 months, pay my 12,000. Everybody is happy. No, we need to ensure that, you need to ensure that we do more equity-based financing where you are involved in maybe in advisory, if not running day-to-day running of the activity, to ensure that as you are financing them, you're also protecting their investments. They say equity-based financing is the bedrock of Islamic finance, but I can tell you that of the 3 Islamic banks that we have in Nigeria today, the fully fledged that I know, maybe one of them has an equity-based financing balance. And that balance, I'm very sure, is not up to 0.5% of their total financing base. Number 2 is mentorship. You need to mentor them. Gone are the days where we'll do this. What we are doing here is enough, but the fact remains those MSMEs, they are not on this platform. The days of doing, going to seminars in Radisson Blue in this, it's not so effective. What we need to do is take this mentorship to them where they are, speak the language they understand with periodic lecture. Today you are at the Dumagu market, you are doing their weekly meetings. You are telling them that this is what they need to do. This is how they should do their business to ensure that they are able to be financially included. They are able to get financing when they need it. Financial literacy, train them on what the minimum required record they need to keep. Purchases, sales, and profit at the minimum that they need to keep to ensure that whenever they approach a bank for facility, they are financially viable. And then we also need to find a way to make the processes in Islamic banking, in Islamic banks, friendly and less cumbersome. I mean, I won't want to mention name of banks, but there are banks today that on your bed every day. So a customer was telling me that on her bed, the first time they just told her she's entitled to take 300,000. Like joke, she just clicked, oh yeah, take. The next thing, she saw 300,000 in her account. She paid the 300,000 well, and then the next thing, you're eligible to take 5 million. are these people serious? She clicked, and the next thing, she saw 5 million naira in her account. Meanwhile, when you come to an Islamic bank, the fastest you can get a facility is maybe 1 week or 2 weeks. Some takes months. So this sector is still at its nascent stage. So we need to continually research and find ways to make the process less cumbersome. I mean, we are way better than when we started 10 years ago. I remember in Jai Bank then, at the beginning, the kind of documentation you will bring, but gradually, as the understanding is getting deeper, as the experience is getting deeper, we're beginning to shrink some of these procedures in a Sharia compliant way. We're beginning to shrink some of this, and I still think that this procedure can be shrunk further to ensure that in 1, 2, or 3 days maximum, anybody that wants financing can take it. I understand that it may not be possible to do the click thing, because there's a process to this thing. There's a process to how you would, if you want to take an Islamic finance facility. Number one, you have to get approval. You issue offer letter. Once they issue the offer letter, the Islamic bank will go and buy the assets, which is very important. For example, in the Murabaha, you have to buy the asset. Once you buy the asset, you own the asset. You will now sell the asset to the customer that wants it. You deliver the asset, and it's at that point that you can even start earning on it. So all this process takes time, and it is highly important that they are adhered by to ensure that you are not violating any of the rules of Sharia. So are they doing enough? I think they have done well, but they have not done enough. We still do more to ensure that we include people as much as possible. Now, I'm not going to quickly touch on this as required. How Islamic are Islamic banks? The good thing is the first panelists have discussed more of this, what Islamic banks are doing to ensure that their products and services are fully Sharia compliant. Number one is regulation. I'm just going to briefly touch on that. Islamic banks are, and I dare say, Islamic financial institution, and they are one of the most regulated industry in the country or in anywhere in the world as it is. In fact, the regulation is such that it will be a bit, I'm not saying it's not possible, to be a bit difficult for you to get away with some of doing some Sharia non-compliant things or doing things that are not in line with regulation. Number one, there's an internal Sharia advisor that is a staff of the bank that starts as a first level check. They are the one that come up with the products. They check your transaction to be sure everything is Sharia compliant. They offer some advisory where needed to. Apart from that, we now have the ACE, Advisory Committee of Experts. These people have the oversight function on the bank's Sharia department. So what they do is, whatever you have product and services you want to develop, they have to approve it. They also periodically review your documentation, your processes to be sure they are all compliant with Sharia. Apart from that, we have the CBN's Banking Supervision Department that will still come and review what you're doing. Both CBN and NDIC, they will review what you are doing as Islamic banks. And finally, we have the CBN's phrase, Financial Regulators Advisory Committee of Experts, which is also comprised of Sharia experts, Islamic scholars, that are also approving these products that have been done by the Sharia auditor, approved by the banks is. They are also going to do a third level review and approval. All these things just to ensure that everything is in accordance to Sharia and there's no Sharia violation in any of the transactions. Staff training. Staff training is very important. Islamic Bank is still very new. 10 years is still a baby to me. And what it means is whenever an Islamic bank comes up, they would have to go and get their pool of staff from the existing conventional bank. Now, Islamic banks doing enough to ensure that these staff are well trained, such that when they are thinking Islamic finance. They have embodied what this thing means, what Islamic finance means, and they are now selling it out to people. I've seen cases where some staff will say, is it not the same thing? It's the same thing now. What's the difference? Imagine that staff now going out attempting to sell these products. what do you think will happen? And Oga, it's the same thing, just sign a jari and take your facility. Do you understand? So Islamic banks need to do a lot more in training the staff, in staff composition and integration, down to dressing, the ethical way of dressing. I don't want to go into an Islamic bank and see some things shooting out. No, it shouldn't happen. Nobody's saying cover your head, but be ethical and be modest in your dressing. Product development, we need to develop more and more products. In Nigeria today, I don't think we have any Sharia compliant credit card. So there's still room for development, product development, how we apply the products also need to be worked on. Then for us to make it so Islamic, to ensure that there's no compromise in any way, there have to be like a complete autonomy of the internal Sharia staff, or at the minimum, ensure that their level is at senior management level so that they're not easily compromised. Imagine when you have a Sharia auditor of bank as a middle or a low-level officer, and then there's one top-level officer breathing down your neck. I want you to do this transaction. If you don't do it for today, you must give me your resignation letter. You know, if that kind of thing happens, it is very likely that that staff may compromise. So I am aware that CBN is doing something on this to ensure that there's a minimum level that your internal Sharia auditor can be before they can allow the person to be a Sharia auditor. And this is just to ensure the safety and the sanctity of Islamic banks. So we have discussed what the MSMEs need to do to ensure they are bankable. We have discussed what Islamic banks need to do to ensure that they finance this all important sector of the economy. And then we have also discussed what the Islamic banks are. What are they doing to ensure that public confidence is not eroded in their transaction? Thank you so much.
Thank you very much, Ma, for that wonderful presentation. And I think doing an exposure into the Islamic finance and banking system, and also looking at how Islamic banks in driving growth and development of MSMEs. So we have to open an account with all these Islamic banks, just the way she has advised us. So I think we have a couple of questions. If you can hear me, we have a couple of questions that are directed to Dr. Adam while the presentation was going on by Mrs. Oindamola. And again, we are going to take those questions. If you have questions as well for Mrs. Oindamola, you can as well drop them in the chat box while Dr. Adam take some of those questions that are directed to him during the next training. So I think Dr. Adam.
Okay.
Thank you, sir. So I think you have some questions. Would you want me to read them, or have you captured them?
You can read them out, please.
Okay, thank you, sir. So somebody asked that this compendium resolution on phrase translated in major Nigerian languages, Yoruba, Hausa, Igbo, is asking if the compendium is translated in majorly English or in the major language that we have, that is Yoruba, Hausa, and Igbo. And the person said, if no, do you see the need of translating it to those languages for public comprehension? So that is the first question, asking around if the compendium is basically in English language, or we have them in other languages as well? And if it is no, do you see it as a need? Do you think there's a need for us to have the compendium in Yoruba language, Igbo language, and Hausa language?
Okay, thank you very much for this question. Actually, to the best of my knowledge, the document, as you can see, the resolutions were made since around 2013 and 14, and this is the first series. And even the first series was recently released in January 2022 this year. So to the best of my knowledge, I believe it is not released in any other language beside English language, which is the official language of the central bank. But considering maybe its need for translation to our local languages, I believe this is not much important because this compendium is dealing with the experts. I believe translating it to Arabic language would be much more relevant than translating to local languages. For local languages, what you may require is to have some pamphlets, some flyers that will just introduce people to the basic operations, not the technical aspect of Islamic finance. And these things are more technical. So I believe the translation may not add, it's not much necessary at this material time. Thank you very much.
Thank you very much, sir, for that answer. I think that answers the question by one of the participants. Then I have somebody who is raising up his hand. I think he has a question, but I wouldn't know who the question is directed to. Please, Tijani Mohammed, please, you can go on with your question.
Assalamu alaikum wa rahmatullahi wa barakatuh. I like also to say thank you to both presenters. They have quite presenting a very good and educative presentation, which definitely we have add to our what we have a little. My question actually is not to Dr. Adam, but it goes to the second speaker, which I wanted to highlight some issues related to what she has said. May I go? Can I go ahead to ask, to contribute? Or
please go on with your question briefly. Yes.
Thank you. What I wanted to is not that question per se, but just is a maybe we may add admonishment, or we may ask her to admonish based on this, because she has been in the industry and also in the financial institutions. We talked about the financial exclusion, like Dr. Adams says previously. Northern part of the country, they are suffering with this issue of financial exclusion. And Islamic Bank is beyond profit maximization. There are some ethical issues and also distributing the wealth to all so that everybody can benefit from. We are not talking, we know that the financial institution is all about profit maximization, but what we are thinking about the Islamic financial institution should be beyond that, beyond profit maximization. So there is still a gap between the rich and the poor in terms of accessing loan in the financial institution. A lot of people who are wealthy, they find it very easier to access this kind of thing in conventional institution. While if you come to the Islamic institution, Islamic financial institution, still you can see there are some elements of this. Because I have experienced, this is an experience, it's not just mere saying, it's an experience. There are quite a gap widely where people that are vulnerable, those that are in need, those that wanted to put their practical aspect into practical reality, into practical system, they are not having access to such kind of loans. And the loans is being advertised that everybody can have access to it. Like she said, there are a lot of awareness that need to be put in place in order to attract more people into the system. But unfortunately, the non-financial, the non-interest banking system are not doing enough, like she said, are not doing enough to accommodate such kind of individual. The reason is lack of sufficient supervision. There are no sufficient supervision. They are just sitting there and waiting for the customers to come in. If they check the credit.
Thank you very much, Mr. Tijani Muhammad, for that contribution. I think his point is basically tailored around the need to do more in the Islamic finance industry, and also the need for players, the industry stakeholders, to come together either as individual organization or coming together as a group of organizations trying to enhance and also create more advocacy for the Islamic finance in order to allow more people to have access to the product and services. Dr. Adam, I think you are raising up your hand. And again, I'm sure maybe Mrs. Oyindamola will have one contribution or two to mention.
Yes, thank you very much. I just wanted to highlight that there is a question also I saw in the chat box asked by a senior colleague, Professor Musa Keita.
Okay.
So yeah, which has passed. It was there, and he was asking two questions. He wanted to speak, but he had a network problem. He was saying that having made reference to the sources of funds, among which the Iifp Academy and the Iifp standards. He said now the Fiqh Academy's resolution bound to phrase, or they are just guidelines. I think this is very important. For the Sharia standards, Iifp Sharia standards, usually what is stated is that they are to be guided by it. But for the Iifp accounting standards and auditing standards, these two standards are mandatory to be followed by all financial institutions under the supervision of central bank. So it's very important. It is stated clearly that they shall make recourse in their financial accounting, in the financial reporting, to IFSB standards and Iifp standards, including the international accounting standards that are issued by other agencies. The second question he asks has to do with the mudaraba and murabaha and commodity murabaha, tawarruk. Among those, he was asking whether they are among the resolutions. Actually, there were about two. There is one related to tawarruk and another one related to murabaha. But as I said, I didn't cover all the resolutions. I have just cited some. So I believe I could have done that by highlighting or merging the two, the resolution related to commodity murabaha, the tawarruk, and its relationship with the INA, and another resolution that has to do with the murabaha. So maybe the document would be, the slides will be updated. Thank you, sir, for highlighting this.
Thank you very much, Dr. Adam. I think Mrs. Oyindamola Dada has some contribution based on the questions that have been asked. Please, you have the floor.
Yes, I just want to say more on what Malam Tijani Mohammed said. Honestly, I also feel it's kind of hypocritical that we shout, oh, MSME, MSME, everybody, as in everywhere you turn to, is MSME financing, CBN is shouting MSME financing, BOI is shouting the same thing, all the regulators are shouting MSME, even banks are saying MSME, and then only 3% of MSMEs can access financing. No, we are so used to this armchair form of banking where people sit down, they come to you, okay, what do you have? Just tick, tick, tick. Oh, you have your collateral, you take the funds and go. Or let's finance you and we are happy. We don't want to do that real work. And like I said, CBN needs to come up with a resolution that would exclude MSME or find a way to ensure that the banks are not heavily penalized for MSME facilities going bad. If they don't do that, well, I'm very sure, I'm very sorry the banks are not going to be willing to finance them. Because if I finance you, I am going to be penalized for the facility going bad. And if I finance you, there's more likelihood that that facility will go bad. So why should I? So all these things has to come from the top. There has to be that disposition to ensure that this works. Honestly, that is where that is what should happen. The poor and the MSMEs should have more access to this financing than the rich that already have funds. Well, unfortunately, the reverse is the case. May Allah assist us.
May Allah assist. And that is where we are going to draw the curtain for today's training, which is currently organized by the Institute of Islamic Finance Professionals and the Chartered Institute of Stockbrokers. I want to thank every one of us, and for me to thank you, I'm not going to be doing that as myself, but it is going to be coming out from the Chartered Institute stockbrokers, who is going to be giving us the thanks. And at that, I'm going to invite again Mr. Chukwudi Unga, who is the head of CIS Academy, and is going to be speaking on behalf of the registrar. Mr. Unga, please, you have the to speak. Thank you.
Thank you so much, Mr. Abdul Akimbode. And we have come to the end of these wonderful lectures. And it is very clear that the facilitators have really presented a very articulate and lucid lecture. So on behalf of the Institute of Islamic Finance Professionals and the Chartered Institute of Stockbrokers, the CIS Academy, we want to thank the facilitators for today's lecture, Dr. Adam M. Abubakar, FIFP ACIS, who spoke on an X-ray of the CBN Compendium of Resolution, the Financial Regulation Advisory Council of Experts. I mean, it was a wonderful presentation. We also thank Mrs. Oyindamola Dada, the MD of Caravan Comfort. She spoke on how Islamic banks driving MSME's growth and development. Mrs. Dada did a wonderful lecture presentation, and it was very, very well articulated. So thank you so much for that presentation. I would also want to thank the registrar of the Institute of Islamic Finance Professionals, Musha. I want to thank Hajiam Wasilat Olarewaju Odeshina. And of course, the moderator, Abdul Akimbode. I want to thank everybody that have been part of this program. I want to thank you for coming and for staying till the end of this program. We are happy to inform you that we are going to have more joint trainings and certification programs and public events from the two. So you should watch out for more of our joint trainings, more of our certification programs and public events. So until we come your way, I want to wish you a wonderful weekend. Thank you so much. Bye-bye.
Thank you very much. And that ends the training. Was jointly planned and organized by the Institute of Islamic Finance and Professionals and the Chartered Institute of Stockbrokers. And from both of us, the two partners, and from me, your moderator, Akimbode Abdulhakim, we say thank you to everybody and also to our facilitators, our speakers, and also to you for taking out your time and your data to be part of this training. We say thank you very much, and we hope to have more of this in the near future. Assalamu alaikum wa rahmatullahi wa barakatuh.
Assalamu wa rahmatullahi wa barakatuh.
Thank you.
Okay, thank you, Baba, everyone.